With Own Boise at Keller Williams Realty Boise, and today is March 16th, Monday, and there is a lot of information swirling around the real estate market and the economy, and all sorts of closures with schools locally here in Boise, and many other businesses are being impacted in a big way. I am getting a lot of questions about what this means for the real estate market, and that's what I want to focus on today. I promised the people that have been reaching out to me, our business, Own Boise, we've got, 88 transactions closed and pended this year, 45 of which are currently pending. So we have a lot of people that are curious about what does this mean for me in buying a home or selling my home, and what does this mean for me going forward? And to be frank, there's a lot of emotion running around right now. And I just want to inject a little bit of logic in explaining kind of what's happening to the best of my ability today. I don't think anyone knows what's going to happen long term in the future. I am hoping that today's video, I'm going to review 3 things that I think are critical in today's market as it pertains to real estate. So number one, there's a lot of information going around about the federal funds rate and what that means and how it impacts interest rates. So we're going to talk about the federal funds rate. We're also going to talk about interest rates as a whole and what's happening with those in terms of mortgages. Then we're going to talk about affordability, and then I'm going to dive into our local Ada County market here. So without further ado, let's go forward. A lot of you have heard that the federal funds rate was slashed to 0, and I've seen so many posts saying like it's free to borrow money, which is not true. That is inaccurate. For normal human beings like you and me. The federal funds rate, just simply put, it's right here. It's the rate that banks charge each other for overnight loans if they can't meet the Federal Reserve requirement. So the Federal Reserve requires the banks have 10% cash on hand, and if they don't, then they borrow that money from either other banks or the Federal Reserve, and they borrow it at the rate that the federal funds rate is set at. So it's at 0. Layman's terms, it's a tool that our government can use to help stimulate the economy when it's necessary. And right now, it's absolutely necessary. Let me show you the history, or a little bit of the history of the federal funds rate, so you can kind of see what's happened. Here's a graph from, I think I went from back to 2005. So back in 2005, you'll remember the economy was booming and everything was going crazy and great. And they had the federal funds rate, it looks like as high as 5.25, roughly 5.25, 5.26. So what they do is when the economy is working well, they want that rate to be a little higher. And the reason for that is it's one of the only tools that the government can use to stimulate the economy if it's necessary. Well, what happened in 2009? We all remember the market crashed as it pertains to real estate, and they went down to basically a 0% interest rate. If you look at this graph here, you can see. And this is, this is something you guys can Google and find really quickly. As you can see, our economy's been doing better over these last few years, right? 3, 4, 5 years. They've started to raise that rate. Well, guess what? Now it's going back down. They're doing what they can to minimize the economic impact of this coronavirus and other things that are taking place. So that's what's happening there. Well, what does that mean for interest rates? Well, let's jump over here. Interest rates are without a doubt at an all-time low. It is very inexpensive for you to borrow money right now in this market, and I think that's a great thing. It's really good for you if you're considering buying. It's good if you're considering selling, because most of you selling are also buying. So keep that in mind. Now, this is actually really interesting. I want you to listen to this. I'm going to read it. As refinance applications continue to surge and lenders working to manage capacity, the 30-year fixed rate ticked up from last week's all-time low. Mortgage rates remain at extraordinary levels, and many homeowners are smartly weighing their options to refinance, potentially saving themselves money. Layman's terms, there's so many refinances happening today that the lenders are actually struggling to keep up with the capacity, so they're artificially raising the rates higher. I think that will change here in the next couple weeks. I think you'll probably see those rates potentially come back down a little bit. I say back down. They're already so flipping low. If you were a betting person and had to bet, is the rate going to go up or is it going to go down? I think the smart money is it's more likely to go up than it is to go down because there's just not very much room for it to go down. All right, so rates are low. The federal funds rate, that's exciting, kind of. It doesn't really directly impact most normal human beings, so don't worry about it. These rates do impact you. So I think looking at this, I mean, this is since 1970. This is just absolutely, this goes back to 1970. You can see down on this bottom chart, I can adjust this to all. Here's your interest rates over the last, 40 years or so. 18% back in September, October of 1981. Not a good time to borrow money. Today, what are we at today? 3.25, just ridiculously low for a 30-year fixed. All right, so moving on. Here's a chart I think that's really interesting. A lot of you have noticed that prices are higher, and you're thinking, well, I'm going to wait for prices to come down. I want you to recognize this is an affordability index. Basically, they take the amount of income people make, the cost of buying a home, and the cost of borrowing money to buy a home. And they kind of put those all into a little soup, and they spit out a number. And the higher the number, the worse the time it is to buy a home. So remember, I just showed you back in 1980, 81, 82, it was 18% to borrow money. Well, that was a 36 affordability. Go back to 2011, 12, the prices were the lowest that they have been in a long, long, long time. And rates were actually relatively low. So the affordability index was a 13. Today, even though prices are significantly higher today than they were 7, 8, 9 years ago, the rates are so low that the affordability is not much different. So is it a good time to buy? Absolutely. It really is a good time to buy. Now, this is all national stuff to this point. This impacts anyone in, basically in the United States here. Let's go local. So I just want you to assume for a second that, things go really bad and people are afraid to buy homes and people are afraid to sell homes. Well, just so you know, in our market, we've had low inventory for quite some time now. Ridiculously low. These numbers right here, if you've been watching any of my videos on the market, 337 active listings in February, that is the lowest it's been since we've been tracking the number. So that's crazy. There's already been people not wanting to sell their homes. The reason they haven't wanted to sell their homes, for the most part, and this is beating the streets, us being out in person, meeting with buyers and sellers every day, is they say, well, I'd sell my house, but I don't have anywhere to move. So the first thing that usually happens when there's an economic crisis like there is today is that people get afraid to do stuff. They're afraid to buy. If that was to happen, let's say our buyer demand fell in half. Would our inventory double? Well, let's look at the inventory. I mean, these are months of inventory, this months of supply. So they take how many homes are active. So let's just focus on the 350 to 400,000 range. There's 51 homes active. In the last 12 months, there's 1,047 homes in that price range that have sold. And that means that there's 0.6 months worth of supply, which means that in basically 17 days, every one of those 51 homes will sell if we don't list any new homes. We'll have no inventory in that price point. So if inventory doubled, it'd be a month and a half. If inventory quadrupled, it'd be 2 months, 3 months, right? I mean, we're talking numbers that we actually could really benefit from. So long story very short, when you're transitioning in a market like we are in today, locally here in Boise, Idaho, an economic crisis, for example, it would take quite some time for it to show up in prices going down and inventory going up. We would need our inventory to go up significantly over quite a period of time before we would see our prices to drop significantly. So I guess the short answer is here locally, we could really use more inventory. And I think it would benefit buyers and sellers both if we had a little bit more normalcy. A balanced market, as we refer to it, is somewhere between 5 and 7 months of inventory. Even over $1 million price range, which in our area, I personally haven't seen under 6 months of inventory until like the last year. We just don't have enough homes on the market. So, okay, what does this all mean? If you're looking to buy and sell in Boise, Idaho, ask yourself these two questions. Do you have a good enough reason to buy or sell? And if the answer is no, then I don't think you even need to ask yourself the second one. So the first one is, do I have a good enough reason to buy or sell? The second question is, can I afford it? And the answer to both of those being yes, just move forward with confidence. That's all I can say is don't stress out about it. If you're selling in this market today, you're also buying in this market today for the most part. If you're an investor out there and you own a property and you're concerned what this is going to do to your value over time, I think there's some writing on the wall that over time you could see prices come down. I don't think there's anything knee-jerk emergency I have to sell right now. Here at Own Boise, we understand that people are concerned of their health, and we want them to be 100% taken care of in that capacity, and we still want to be able to serve them. So if you have a loved one who's sick, or you yourself are sick, or you're worried about being quarantined or being catching the coronavirus or COVID-19, we have plenty of measures in place to still help you buy and sell. We're happy to do virtual listing consultations, virtual buyer consultations, even virtual showings if you want us to go out on your behalf and FaceTime you. Luckily, with these awesome phones that we have, we can take you in the home, show you everything you need. We can do the majority of this while we're still practicing social distancing and helping keep our health in mind here. So if you have any questions or you want to know anything else, please don't hesitate to reach out to us. We're happy to take care of you in any way that we can. We hope you're doing well. And if you need something, again, call us. Thank you so much for taking the time to watch this video. Have a great day. Again, I'm Chase Craig with Own Boise at Keller Williams Realty Boise. I appreciate your time.